Thank you for joining me. I'm Alex, and I want to do something completely different today. So today I'll go over all the stocks I own. This is my Robinhood account, and I do have a 401k, which basically just has index funds. And I do have a Roth IRA, which basically has two stocks and a couple index funds. And in my Roth IRA, I have mainly Tesla and a little bit of 3M. And that is one account I'm not going to go over. And I'm not going to say how many shares I own for each stock, but these are ranked by the total equity that I have in each stock. So this is basically all the stocks I own, and in order of how much, and not in order of how many shares. And so you can kind of make your own judgments. So I'll say a little bit about each stock and why I bought it, but I'm not going to go into detail because for all but one of these stocks, I made a video about it, and I basically decided after making a video to buy the stock. One major exception to that is Tesla. I made a video once, and I just keep buying shares because it's basically the one stock that I really want to own. It's just that I'm not rich enough to just drop $500 on a share like every week or every month, or So let's start here by Arcimoto, which is the one stock that I haven't made a video about, and I don't own a lot of shares, and the shares are down very much. And I think I bought some at like $3 or something like that. It's just I had some money laying around. I saw Now You Know go into detail on Arcimoto, and I thought it was very interesting. So obviously not something I'm going to sell, and something that I'm fairly happy holding pretty much indefinitely. Not sure if they're ever going to get big, but I do know that they have a very compelling product, and it doesn't seem like anyone else is going to compete with them. So there's that. And then we have Amazon. So Amazon is one of those where Robinhood now allows me to buy fractional shares, and I had a couple bucks left, so I bought like a fraction of 1% of a share. So that's why I own Amazon. Again, not unhappy to be owning Amazon. I'm not unhappy to be owning any stock that I own. Otherwise, I would sell it. But I do think that Amazon is doing fairly well right now. They're very recession-proof, and so I don't think they're going to be affected by the current situation a whole lot. Then we have Bank of America. This is one of the first stocks that I bought, and they're down a lot since I bought them. And I wouldn't buy it today, but I also wouldn't sell it today. I think they're reasonably priced right now, and I'm okay with just holding them for the dividend at this point. I'm not sure what their exposure is to oil stocks and things like that, or I'm not sure how many loans they gave out to oil companies that in the current climate might not be the safest thing. So I'm not sure how they're going to fare. But I assume they're going to be around, so not unhappy owning them indefinitely for the dividend, basically. Carnival Cruise Lines is one of the stocks that I'm mad at myself that I bought it. I bought Carnival because I kind of underestimated the current situation is probably the best way to put it. I didn't think that it would get this bad, and obviously I figured that things would be done sooner to kind of limit the spread, and so they're down, and they deserve to be down. No one knows how long the situation is going to go on, and cruises are really the worst thing you can do right now. And so obviously they're going to be down. I assume they're going to come out the other end at some point, and I assume they'll get back up there, but who knows when. Also, don't think that they're going to pay dividend for much longer and for the foreseeable future. So kind of just holding on to that because I think it's going to go back up, but it might be a couple years. Then we have Siemens. Siemens is one of the companies that I'm fairly happy about because they do a lot of renewable energy. Generally, all the wind turbines that you see in Germany are made by Siemens, and so they have a lot of exposure there in very good future sectors. And they also do a lot in healthcare and all that. So I do think that Siemens is going to go back up fairly quickly. They're down probably about 30% from where I bought it, and don't see a problem. Don't see Siemens ever going broke, honestly. Aflac, big insurance company, kind of a dividend play, and I think they are down close to half since I bought them. Might buy more. I think that they're a very safe business right now. I think that they're one of the best buys right now. I'm pretty sure they're a dividend aristocrat. So if you're looking for reasonably safe dividend stocks, I think Aflac is probably one of the best bets right now. What do we have here? HP. HP is a company that I bought after the announcement that Xerox might buy them. I think that at the time it was a reasonable buy. I did an analysis. I looked at the dividend, I looked at how the business is doing right now, and I decided that HP was actually the better stock to own versus Xerox, and so I bought some HP shares. Since then, I think they're down 25-ish%, maybe more. Couldn't tell you. So fairly happy with that. Obviously also not going anywhere. Since then, Xerox has announced that they're going to buy them, and now for a much reduced price. So Xerox is actually buying less for my shares than I did. So nothing you can do about it, I suppose. Citibank, or Citigroup, however you want to call that. Bought them after I made a video about them. It's more of a dividend play, and the reason that I bought them was basically that the stockholders' equity is actually higher than the market cap, and so I really didn't think that you could be doing badly buying a stock that had a higher stockholders' equity than the market cap. Again, probably a problem there is the exposure to oil companies, but I haven't looked that in depth into it, and so I couldn't tell you what their exposure is. But they're a huge bank, and they're very likely going to be around, so not too worried about that one either. AT&T, one of the companies I bought very recently. I've been buying throughout the downturn, and so AT&T I bought because of the 7% interest, 7% dividend. Obviously, people are not going to stop using their cell phones just because they're broke. Just because they lose their jobs, because you in this time need a cell phone to get a job. So a cell phone bill is not something that you can just avoid at this time, and so I figured that AT&T is should be one of the least affected companies by the current downturn, and so not sure if I'm going to buy more, especially since obviously they could announce that they're going to stop paying dividends, in which case the stock price would go down significantly. But overall, I think that if our horizon is out far enough, I think that there's no problem with AT&T over the next 5-10 years. Then we have Macy's. Now Macy's I bought early last year. They announced their earnings and they didn't seem too bad to me, but the stock price dropped significantly, and at that time I think the dividend was around 6%, maybe slightly more. Then the current situation happened and stock price went down way bad, and I bought some more shares. Currently I wouldn't recommend buying that. once there is a current estimate of when the current situation is going to end, I think that Macy's might be a decent buy. But for now, I would wait and see if this thing is going to last for a few more months. I don't think Macy's is going to be a good buy. But if things are going to be over soon and they can reopen their stores and people can come in and buy stuff, I think Macy's is very undervalued at this point. Lufthansa, also a stock I bought after I made a video about it. I kind of did all the airline stocks: Delta, American Airlines, Lufthansa. I think there was another one. Out of all those, I figured that Lufthansa was the best buy, and since they have a huge air cargo business, I really think that this is going to be the best airline to own if you're going to own airlines. Now, what the current situation is doing to airlines is pretty terrible, so I wouldn't blame you for not wanting to buy the stock, but I think that it's a very good buy, and I do think that they're going to be around for a long time, especially since that's the only major German airline, and Germany can't really afford not to have one. So very sure that they're going to be around. I would say like maybe 98%. NIO, Chinese electric car maker, used to be the biggest one, I think. I don't remember my video that well, but I do think that they're doing good things. I think that they have a good chance of being the number 2 in China after Tesla. And they've been doing things for a while. I think they're fairly safe. And I do think that, especially with the current situation, that is actually a very good buy. Fitbit. Now, Fitbit, as I mentioned in a couple of videos that I made, I bought Fitbit, which was one of the first stocks I bought. I sold Fitbit because Apple made their Apple Watch, and I don't think that Fitbit really could compete with Apple because Apple obviously had the better product. They had all the features that Fitbit had. It just it was slightly more expensive, and by slightly I mean like maybe 3 times the price. So sold Fitbit because I didn't think that they could compete, and then Google was going to buy Fitbit, made an offer, so I bought some shares then, and then I got some dividend payments. The stock price went down, so I bought some more shares, but overall, I think that it's a reasonably good assumption that Google is actually going to buy Fitbit, and they're going to buy Fitbit for a higher price than what it is at now. So if you want to make reasonably safe money, then I think that Fitbit would be a fairly short-term investment. The other reason I want to own Fitbit is just to own Google shares, and I think that this is a pretty good way in. Obviously, since then, Fitbit has dropped a lot more than Google has. Google has dropped a lot more than Fitbit has. So if you can do fractional shares, for example, I would buy Google right now. If you can't, Fitbit's still good buy. Nordstrom. Bought it basically for the dividend, and I bought it before China had their first current case. So I figured that Nordstrom was a very safe buy because Amazon hasn't killed them yet, and they've tried for a decade. And so I thought that there were really no new risk factors going on there. I do think that if the current situation doesn't last too much longer, that Nordstrom is probably very undervalued. But consumer behavior might change because of the current situation, and that would be a really bad thing. So that could be a problem for them. Going to have to see how it plays out, but I'm not selling that right now anyway. Discover, made a video about them, compared them to American Express, Visa, and MasterCard, and I thought at the time Discover was way the best investment out of the 4 of them. And since then, it seems like the stock has dropped like 50%. So happy to own them right now. I bought some more over the past couple weeks, and I think I'm going to buy more in the near future. Again, a stock that really shouldn't be affected that much by the current situation might even do the opposite, because people are going to maybe need to buy stuff on a credit card that they can't currently pay off, and so interest payments and everything is obviously going to be very good for Discover, and so really wouldn't mind owning a lot more shares of that, and I'm pretty sure I'm going to buy a lot more shares of that over the next few weeks. Then we have People's United Bank. They're a dividend aristocrat. They're not a huge bank, but they had a dividend of over 4% at the time. Seemed very safe. Would probably stick to it, but they've dropped a lot since I bought them. I would assume they're better by now than when I bought them, and couldn't blame anyone for buying that right now either. And then we have Tesla. So Tesla is the one company that I'm currently very excited about, because they're obviously producing a product that will be huge in the future, and they're seeming to grow about 100% year over year. And so if things go back to normal quickly, I think that they can expand to their new gigafactory in Germany, and they can get China up to speed, and they can do all the things to probably grow over 50% year over year for the foreseeable future. So I think that Tesla is the one stock that I'm never going to stop buying. So I made a video, if Tesla is a buy at $1,000, and I said that yes it is, and I think that even at $2,000 it's probably a buy. And so these shares are pretty much a bargain right now. So if you want to own Tesla, I'm not sure if you can get them cheaper than right now, especially if people realize how bad of a situation this is for everyone else. Tesla has a lot of money on the balance sheet, and if this thing doesn't turn into a major recession that lasts a lot longer than we think, Tesla is going to be fine. Ford might not be, GM might not be, and so people might realize just how good of a buy Tesla is at these prices, and so I'm not going to stop buying it. I think I'd buy it at 1,000, I'd buy it at 1,500, I might buy it at 2,000 a share. So that's it for me for today. That's all the stocks I own, and if you like this video, make sure to subscribe. I'm coming out with more videos every day before market open. I hope you have a successful day.